What is going on, everybody? It's your boy Stas here. Welcome back to yet again another video. And cheers, by the way, guys. I appreciate you all for tuning in. We just hit 45,000 subscribers. And guys, the next goal is 50,000. It wouldn't be possible without you guys. So again, I appreciate all of you for tuning in. And in this video, we're going to break down everything that you need to know for this week in terms of stocks. We're going to break down 5 stocks, all of which are reporting earnings this week. So we have to go over the charts, the estimates. You guys know the drill. But first, hit the like button. Do not forget to subscribe and get your free stocks for a moo-moo. Once you open up your account using that link down below and you deposit at least $100, you'll get 5 free stocks. Deposit at least $1,000, you'll get 10 more free stocks, and overall, your uninvested cash for now will earn up to 8.1% APY. So again, guys, use that link down below or simply go to stassurfest.com/moo-moo. And with that being said, cheers. Let's get into it. So you guys probably remember last week was a bit of an interesting week for the stock market. We had some downwards trading on the S&P 500. You guys see that right here, where on QQQ, it was the opposite. We actually uptrended all week. We hit an all-time high on Friday. You guys see right here. And on the Russell, we actually downtrended all week. You guys see that right here pretty aggressively. I mean, I guess not that aggressively, but still, we downtrended all week on the Russell and on the Dow Jones. You guys see that right here. Dow went down pretty much every day of the week last week. So, yeah, sometimes, guys, stocks move, or the indexes, shall I say, they move in unison, right? They kind of go together, but there are times where they're all over the place on a specific day or on a, maybe on a week. For, in the grand scheme of things, though, indexes tend to go in the same direction, obviously, which is up over time. But in the short term, on any given week, any given month, any given day, it could be different. It could be all over the place. And this week we just saw in the stock market, it was one of those weeks. We had some selling in the Dow, the Russell, QQQ, big tech did very well. That hit all-time highs, and the S&P slid down a little bit as well. So that's what we're coming off of heading into this week, guys. So it's going to be interesting to see if we get maybe a bounce back on the Dow, which on the 4-hour chart here, it looks like it might be due for one, after having 5 straight red days. Same with the Russell. I'm looking to see if this potentially bounces, maybe if it holds trend here, which is at about 2,300 points. That'd be a spot where buyers maybe come in. So let's see, guys. Let's see maybe if SPY rebounds as well. QQQ hits another all-time high. So let me know your thoughts in the comments. I'm curious kind of where your head's at. And now let's dive into the stocks. We have 5 stocks to break down in this video. Again, all of these companies are reporting earnings this week. Number 1 being Nike, ticker symbol NKE, which, man, Nike, it's been rough. It's been a wild ride over the last year, over the last couple of months especially. I mean, look, last 2 times they reported earnings, 2 times ago, the stock collapsed from $98 all the way down to about $75 after earnings, which for Nike, man, for a company like Nike with such a strong brand, I mean, yes, they're struggling in the short term, but for Nike, that's a big drop, very big drop. And then, we consolidated a bit for a month, and then they reported earnings last time, which actually we ran into earnings last time. So we went from $69 all the way to about $93 heading into last time they reported back in September or October. And then they tanked after earnings again. And well, here we are. They've, the stock's been downtrending ever since the beginning of October, from $90, $93 to where we are now, $76. We're down 14%. So guys, Nike, yeah, they're struggling. Sales are projected to decline 9% year over year. Last year they did $13.39 billion. Now they're projecting $12.16 billion for the same quarter. So sales are going to be down about 9-10%. EPS, 64 cents is the estimate versus $1.03 from last year. Yeah, not looking that great for Nike, guys, and they're kind of in a turnaround period. I mean, they got a new CEO, right? Or was that Starbucks? Or was that both? Yeah, that was both. I think Nike, yeah, they got a new CEO too, and they're trying to shift their strategy. You know, they were going heavy direct to consumer, you know, kind of going away from their traditional route, if you will, to kind of help on the profit margins. But that is hurting their sales. Let's be honest. That's hurting their sales, and we'll see if they're able to turn it around. I'm actually curious what their numbers will look like now on, for this report, as the stock is down to a multi-year low. We're down to like a 6-7 year low right now on the stock, guys. Not looking good. So Nike is reporting earnings on the 19th, which I think is on, that's Thursday. Yeah, I'm pretty sure that's Thursday after the bell. Yep. So keep your eyes on Nike on Thursday. FedEx, FDX is another one for this week, which we are looking interesting on the charts here. We have a cup and handle. You guys see that in the making here on the 4-hour time frame. Cup, handle. Maybe we actually get a nice pop on FDX here. If this handle plays out in the cup and handle, maybe we start going back towards 300. Let's see. But FDX, cup and handle, clear as day, heading into earnings on the same day as Nike, Thursday after the bell. So FDX, they're looking to do EPS of $3.95 versus $3.99 from last year. So pretty flat on EPS. And on revenue, $22.12 billion is the estimate versus $22.16 from last year. So, pretty flat numbers expected year over year for FedEx. And the stock chart actually looks pretty decent. So we're going to monitor this cut, this handle, and see if it starts playing out maybe towards 300, and then 300 to 305, 310. That's the breakout spot. If that were to break out, there could be even more upside on FedEx. So stock number 3 is CCL, Carnival Cruise Line, which, I mean, I've never been on a cruise. Have you guys? Let me know in the comments. I might go at some point in the future. Who knows? But Carnival Cruise Line is one worth watching, as the entire cruise industry has bounced back pretty nicely since COVID. We have CCL reporting earnings on the 20th, which is on Friday, I think. Yeah, Friday in the morning. We're getting CCL. They're looking to do EPS of 7 cents versus negative 7 cents from last year on revenue of $5.92 billion versus $5.4 billion from last year, up 9.7% year over year. So CCL, guys, looking good in terms of performance versus last year for EPS and revenue. The best so far out of the 3 companies that we've talked about. Not bad. And the stock chart looks like we're uptrending, obviously. We have been for months, and now we're cooling off a little bit heading into earnings. Maybe if this thing comes down a bit more, 24.50, that could be a nice entry point on CCL. So keep your eyes on that. And the next stock on the list, guys, actually, wait, before we even cover it, make sure to join my email list. I'm sending out my top 3 stocks for free every single Monday, which is tomorrow, right to your inbox, guys. All you have to do is put your first name and your email address using that link down below in the description box, also pinned in the comment section. Again, it's free, and I send you my top 3 stocks every single Monday. So Micron, MU's the ticker, guys. Micron is this week, I believe, on, let's see here, guys, the 18th, which is on Wednesday after the bell. And Micron, man, this stock chart has not been looking pretty. I mean, this thing's been flat for months. Ever since they reported earnings, not this past quarter, but the quarter before that, back in the end of June, the stock was at $158, and let's just say it's been flat, or not even flat. It's been downhill since, and we flattened out over the last couple of months. So we saw a big down move from 158 all the way to $84, which was a 46% move down. And since that point, we've been flat. We've been steady for the last 4 months at about 90, $100 a share. Now we're getting ready maybe for a breakout, potentially. But, we're going to have to see if it starts pushing out of 105, $110 a share. And, that'd be where potentially it starts to break out. But MU, again, they're reporting earnings on Wednesday after the bell. EPS estimate is $1.77 versus the loss of 95 cents from last year. Very good year-over-year performance there on revenue of $8.71 billion versus $4.73 billion from last year, up 84% year-over-year. So, guys, Micron by far and away is growing the most year over year on the list today. Out of these 5 stocks, Micron takes the cake. But, man, the stock performance in the last couple of months does not take the cake. It is not looking pretty. But overall, guys, if we pull up, let's say, the 3-year chart, the max chart, obviously, we're still looking really good. I mean, Micron got a bit of ahead of itself, arguably at $158 a share. That pullback was justified, arguably, and now we're rebounding quite nicely. If they crush these earnings, provide good guidance, this might be able to break out of this 110, 115 resistance finally, once and for all. So that's Micron, ticker symbol MU. By the way, guys, hit that like button. Let's get at least 200 likes on this video. Make sure to subscribe as well. I think 75% of you guys watch the content, but you're not subscribed. So if that's you, what are you doing? Make sure to subscribe. We're on the road to 50,000 subscribers. So CarMax, CMX, or KMX, excuse me, is the last stock on the list, and they're reporting earnings this week. Obviously, they're on the 19th, which is on Thursday. And guys, this chart looks a bit wonky, right? We're at a big resistance. Well, I guess actually we broke out of it, $85, $86. That was resistance for months. We broke out of it a couple of days ago, and we actually closed above it. And now it looks like we're trying to pop off of that level, old resistance, as support, which is good. CarMax, if I pull up this 1-year chart, man, that spot has been resistance for longer than I thought. The high 80s, mid-high 80s here. This stock's been struggling here for about a year and a half, guys. I mean, look, CarMax has not broken out of $85, $87 a share since September of 2022. I mean, that is, 2 years and 3 months ago? Yeah, I mean, this stock looks like, it wants to break out at some point here, and it's going to take earnings. It's going to take a catalyst, and it looks like we're trying to break out. But the risk here is we're already up a lot heading into earnings. I mean, look, in the last 3 weeks, the stock's up 20%. So, I don't know. I mean, if the earnings are bad, yeah, this could easily dump like crazy. But if they surprise, guidance is good, boom, this could actually start breaking out to a multi-year high. And they're expecting EPS of 60 cents versus 52 cents from last year on revenue of $6.05 billion versus $6.15 from last year. So their revenue will be down about 1.6% year over year. So keep that in mind. If that surprises and somehow, they're not declining revenue-wise year over year, maybe they're growing, guidance is good, that could cause more upside here. In my opinion, of course, trade at your own risk, guys. Do your own research, the whole 9 yards. But, yeah, that's pretty much it for this week. Those are 5 companies, 5 stocks: Nike, FedEx, Carnival Cruise Line, Micron, and again, CarMax. And, guys, we could talk all day. I mean, I could go 5, 10 more stocks, but the video would just be way too long. So, for now, with that being said, I'm going to wrap it up. Hit the like button. Do not forget to subscribe and snag up your free stocks for Moomoo. Check out my Patreon as well, by the way. That's linked down below. And again, for Moomoo, open up your account and deposit at least $100. You get 5 stocks. Deposit at least $1,000. You get 10 more free stocks. And overall, your uninvested cash for now will earn up to 8.1%. APY. So guys, use that link down below or simply go to stocksurfest.com/Moomoo. Get your free stocks. And with that being said, cheers. I'll catch you guys in the next video.